All right, on to our next panel, which I'm certainly really looking forward to. I'll ask our panellists and moderator just to start making your way up to the stage and, in fact, grab a comfy chair. This panel is going to look at the issue of climate change and the fact that Australian farmers for a long time now have been on the front line of a changing climate. Despite decades of political paralysis, our farmers, or cockies, are getting on with the practical steps towards a low carbon future. So how is everyone doing it? What are some of the newer technologies and innovations we can learn about? We're going to hear about some of that today from our speakers. On the panel, moderating, we have the Head of Corporate Affairs for Syngenta, Jaelle, and she'll be joined by Jason Strong, the Managing Director of Meat and Livestock Australia. Jason has more than 30 years red meat and livestock experience, knowledge and connections from the farm through to the end consumer in both domestic and international markets. We also have Alasdair MacLeod. He's the Executive Chairman of private investment company Macdoch Group. In Australia, the Macdoch Agricultural Group is made up of operations in beef cattle, wool growing and cropping, as well as investments in new agri-tech innovations that enable more efficient use of natural resources. And Hugh Killen, Managing Director and CEO of AACo, Australia's largest integrated cattle and beef producer and the oldest continuously operating company in the country. Before he became AACo's CEO, Hugh held several senior executive roles, which included managing Westpac Banking Corporation's North American business throughout the global financial crisis. Ladies and gentlemen, please welcome our panel. I'll hand over to Jaelle.
Thank you, Lucy. I'm very happy to be here today to discuss such an important topic. Agriculture is certainly on the front line of a changing climate. I actually lost count of the number of times climate change was discussed yesterday during the conference discussions. We've also had recently the IPCC report, the most recent one, calling for a transformational change to make a real difference. So I'm going to start with a question to each of you. There are so many reasons why organisations such as yours should be taking climate change so seriously. What motivates you and your business the most? And Hugh, I'll start with you.
Thanks, Jaelle. Well, as the introduction said, AACo's been around. In 2024, we would have been operating for 200 years, and it's our obligation to make sure AACo continues to operate for another 200 years. And so when I think about climate change and sustainability brought broadly, that creates an imperative for us. It started, for me, I've been running the company since 2017, and I remembered when I presented to the board very early on in my time about sustainability, they really thought I was a bit mad, to be honest. They thought this got this mad banker that's coming to run the company. And I think the point is that it's a journey, and you've got to go on that journey and actually step on through that as you get through it. So the first point for us was actually acknowledging the science of climate change. And so once we got our heads around that piece, the journey became much easier. And what we've done over the last couple of years is actually start thinking about natural capital more than carbon, and that really starts opening up a much wider range of opportunities for AACo more broadly. So we have a wide set of stakeholders as a publicly listed company, obviously, and they expect that we move in this space as well. And I think the other piece, just to close, is we are large. That means we're a big target sometimes, but it also means that we can help change. And we can actually start to think about our estate differently and what we do from a production perspective, and hopefully bring others along with us.
Thanks. Rebecca.
Look, that segues quite nicely to the investor group on climate change, which was set up over 15 years ago by industry and retail funds in Australia, who now represent over 7.5 million beneficiaries in the country. And really it was to protect and enhance their returns and to ensure that they were adhering to their fiduciary responsibilities to their beneficiaries. And really at the time it was, the long-term risks of climate change and how that might impact their portfolios. And 17 years later, we're experiencing, increasingly severe and frequent climate events that are, impacting the beneficiaries who are obviously on the front lines of bushfires and floods. And so really it's about not just looking at the risks, which has been a big part of the focus, but more and more now being part of the transition and part of the solutions as we transition to a net zero economy. And the reality of the significant pools of capital, our members represent over 3 trillion in assets under management in Australia alone, and that significant pool of capital can obviously bring a great deal to the transition, and that's part of the reason why our members and we advocate for the enabling policies that will really unlock the billions, which is what's needed. And the IPCC report said that we need, to increase the investments, between 3 and 6 times the current rate. And investors have the capital and they're willing to invest that capital, but it's really identifying, what are the key sectoral barriers that they can unlock and really unleash that investment. And we've heard some of that before with Andrew Forrest and the types of things that he's doing sort of as an investor, and we need to see more of that. So the super funds are willing to put the capital, towards that transition, because we know that governments and companies can't do it alone.
Thank you. Jason, what motivates the MLA?
I think for us, for MLA particularly, there's a very specific point in time when this became a big issue, and that was when our managing director at the time, Richard Norton, announced at our AGM that there was this opportunity to be carbon neutral by 2030. And not only did that start a clock ticking, but it also created conversation, quite a bit of which was pretty volatile and challenging at the time. But 4 years down the track, it was incredibly insightful decision to make, but also it put us on this path to really critically looking at what the opportunity and solutions were. But I think it also gets us aligned with this future view of where the challenge sits. So why should we be interested? It's a big future issue, and there's a lot of opinion and view about it now. We're still scrambling to fully understand, and even yesterday at Senate Estimates, we're getting questions about our focus on CN30, but at the same time we're getting basically accused of supporting something which doesn't exist. So we've still got this challenge about the views that we're fighting against as much as the facts. But most importantly, one of the main reasons as an industry why we've got to be focused on solutions now is that we still have control of the issue largely. We still have the opportunity to set a path. We still have the opportunity to find solutions. We still have an opportunity to connect those with productivity and profitability, and we're not yet at a position where they're being forced on us. So there's a window where we can demonstrate progress, we can demonstrate commitment, and we can do it in a way which is hand in hand with productivity and profitability of the industry.
Thank you. Alasdair.
Well, as you say, Jaelle, there's a heap of reasons why those of us in the agriculture industry should be taking climate change seriously. And for me, it's been a journey, but that journey kind of reached its crescendo, if you like, late last year when I attended the Glasgow Climate Conference, otherwise known as COP26, where there was a bit of conversation about agriculture, but the reality is most countries around the world haven't yet decided whether agriculture is part of the problem or part of the solution. And so there was, for me, some confusion around that issue there. The second thing I discovered in Glasgow is that it's very fashionable to give Australia a good kicking. The global community, for some reason, don't think we're doing a very good job on climate change. So that was another thing that was, I've got to say, a bit upsetting. And the third thing that really got me going was that I became even more aware of the global campaign that is being waged against livestock. There was actually a motion put forward just before the climate conference to make the entire conference venue meat-free. I mean, this is the most extraordinary idea, that you could have a major global conference and not serve meat at it. But these ideas are getting traction. Unfortunately, it was kicked into touch because Glasgow is in Scotland, and Scots people are pretty sensible, and they didn't have a bar of any of this, so well done. Hands up, any Scots in the room? Yeah, there we go. Thank goodness for Scotch sensibility. So that idea was kicked into touch, but it's an illustration of some of the things that are being waged in the global war against livestock. Now, what should we be doing about that, about all these things in this country? I actually think that Australia is incredibly well placed to show some real global leadership in this issue. Not only have we got very innovative farmers, we've got, dare I say it, some enlightened industry leaders, and Fiona and Tony and Jason up here, who understand the issues and understand the opportunity that a country like us has got to show some real leadership. And I personally would love to go to the next climate conference with someone from Australia kind of going, well, hang on a minute, you might think we're not doing a very good job with climate change, but here are some things that we're doing with the agricultural sector that make some really good sense. So, and Jason, I think this has got to be led by the livestock sector. You know, you've shown enormous leadership with your CN30 project, and I think we've got to start, you're doing a huge amount, but I'm afraid we've got to do more.
And that segues nicely to my question to you, Jason. You obviously have thousands of shareholders that you need to keep happy. What are their expectations of your climate credentials to keep investing, for the CN30 initiative that you're running at the moment?
Is that for me or for you?
Jason, that was for you. I'm going to convert it to your question.
Okay, so MLA is in a bit of a challenging position when we think about our stakeholders. So MLA is a service organisation, so we have a vast array of stakeholders, and to highlight how challenging that is, the numbers of how many stakeholders we have varies massively. So whether it's 160 or 80 or 200 and something thousand, but it's all the livestock producers in the country and then the various organisations that we touch along the way. So supporting that vast array of stakeholders is an incredibly important component of this, but we also have a connection across the supply chain as well, as far as a support organisation is concerned. So one of the key drivers for this is how do we understand the needs, requirements, opportunities for our levy-paying producers, but also how do we help them manage, mitigate the risk that exists from the perception of the livestock sector particularly, but also how do we connect to consumers with a really strong message. So we're trying to balance a whole range of challenges across the red meat supply chain, but it's this consumer requirement or consumer perception which is one of our biggest challenges, but also biggest opportunities. And the livestock sector's become a really easy target. Most people in the world, regardless of where you're from or what you do, can recognise a cow, but the majority of people aren't personally connected to one. So it's pretty easy to blame the cows for all sorts of stuff. So you even think about the numbers that have been talked about in the conference so far, and the livestock sector in Australia accounts for about 12% of emissions. And so some people talk about 15 or 10, but it's about 12. It's interesting that that becomes a focus of the issue, not the other 88%. And every consumer contributes to a big chunk of the other 88%. So why aren't we starting a conversation with the agriculture and livestock sector has done a fantastic job of reducing emissions by half since 2005. You now only account for 12%, and it's a pity the other 88 doesn't follow your lead. So the consumer perception is really important for us, and how we connect with them is one of the vital things that we have to do, and we've got to be positive and proactive in getting that message out. But we've also got to be making sure that the things that we invest in are connected to productivity and profitability as well, because we've still got to feed the world and we've still got to be able to pay for these solutions as well.
You're quite an early mover as well. I mean, the CN30 initiative was announced in 2017. Was that your main driver?
We could say yes, but no, I think it's progressed over time. I mean, that was one of the most critical points in time in this discussion. Like I said, when Richard stood up at the AGM and said we're going to be carbon neutral by 2030, there's a lot has transpired since then. We're just really lucky we've had a 4-year run-up. So yes, that was a very important starting point, but there's a lot more to it now.
And Hugh, what
Can I
are
make
your
a comment
investors?
on the stakeholder groups?
Sure, yeah.
And I think it's interesting because if you take where Jason's coming from, which is a view in terms of producers really, we welcome as a listed entity having other stakeholders that actually drive us to change as well. And so it's no secret that the previous presenter is a significant shareholder of AACo, for instance, and he will have demands on our company in terms of how his vision is going to translate as an equity holder of the company. And we welcome that, and it makes us think differently. If I sit around my board table now and the conversations we have in terms of a production system, they're very different than they were 5 or 6 years ago. And as I said before in my opening, we want this company to be around in 200 years' time. And I think one of the other points that was made before is that there's a huge gap of capital being put to work in this space. And if we think about natural capital and moving into that space, I think it's about $711 billion a year that needs to be spent. The money's there, we don't have a mechanism to get it into the industry yet. And so we all play a role in there, and as a public entity we do that. The other thing that's important is our customers that are buying agricultural products from Australia expect that we actually are moving in this space as quickly as we possibly can. I would like to think that every kilo of beef that I produce is going to get a premium if it's sustainable. I don't think that's going to happen. I think it's a ticket to play. And so that piece is playing through as well, so we have to move. Our financiers are pushing very hard into this space as well. Rabo, for instance, who we work very closely with, are very adept in thinking about how they can give us concessionary capital if we actually have the right sustainability strategies in place. But there's a stick in that as well, which is if we don't do it, they won't finance us. So we've got to think about that one as well. And then the other piece that I think is really important for our industry is our employees and the people that are in it. They actually want us to move as well. And so the view that my father might have had as a farmer versus mine versus my kids are going to be very different as well. And if I think about when we released our sustainability framework across AACo and we consulted with our people, one of the most inspiring parts was sitting down with boar runners from Brunette Downs, for instance, who are actually very educated in this space. And so I've got to attract the capital, I've got to attract the investors, I've got to have the employees, I've got to have customers. So if you don't move in the space, you're just going to lose your ticket to play.
That ticket to play piece is quite an important one. Rebecca, how does that align with what you're hearing in your membership? And where do you think agriculture rates in terms of the scrutiny it receives compared to other industries?
So I think, as was said, investors have the same, they want sustainable long-term returns from the companies that they invest in. So it's a partnership, and it needs to be a partnership, and we're sort of working towards the same goals ultimately. And similarly, we're hearing that from the beneficiaries who want, greater action on climate and to manage and protect their returns, obviously, sort of for the longer term as well. So I guess we're hearing the same thing. It's about how we get there and breaking it down sort of to that sector level and what can be done and where those investment opportunities are. But in terms of the focus on agricultural sector, I guess historically investors have been looking more at the sort of the 55% of emissions, sort of more focused on the energy and a bit more in industry. But certainly the pandemic and now the Ukraine crisis as well has really highlighted the interdependencies across supply chains and across systems. And investors are seeing that play through. While they may not, have large investments in sort of agricultural companies, for example, it's flowing through to the Coles and the Woolies and the big retail funds, the big retail companies that they do have ownership in. And then obviously, floods and the transport and all the different issues that we're seeing play out and it's hitting sort of our tables at home. So investors are increasing, investors in Australia are really looking at how they can look at this from a more circular perspective and looking at the sort of the more circular economy aspects to this and the interdependencies. And we're working collaboratively with our international investor peers on investor expectations for particular sectors. So our North American counterparts released investor expectations for the food and agricultural sector, for example, because they're engaging directly with some of these large companies. So investors in Australia take these reports, look at the expectations and the principles that are in them and adapt them in their local engagements with companies in Australia. So to give you an example, a couple of the sort of the principles in these investor expectations guides, and these are used through the lens of the Climate Action 100 Plus initiative that is focusing on the world's largest emitters, but ultimately these sector expectations and these expectations can be applied to all companies. But some of these principles include, integrating climate action into corporate decision-making processes and procurement policies and standards, incentivising and supporting agricultural producers to reduce the climate impact of crop and livestock livestock production and enhancing the agricultural carbon sequestration, aligning capital expenditures, really importantly, and product development and R&D with a 1.5 degree scenario. And we're really not seeing enough work across the board from all companies on that capital expenditure piece. And how companies transition to more efficient and renewable energy use across transportation, operations, distribution, obviously, and the supply chains. Obviously, how they improve processing, manufacturing, packaging practices to reduce emissions, waste, food loss, obviously, and packaging. And then this partnership, this collaboration piece is really critical. And this is where investors are really getting leverage in Australia and also at a global level, but also to look at, for companies to do this as well, and for companies to collaborate more with their peers, their suppliers, and also on policy makers to really drive transformation across this sector in particular. So this will be an increasing focus for us and our investors. And we're also seeing global new frameworks coming out, such as the Task Force on Nature-Related Financial Disclosures, which is really putting a frame around how investors can, look at, how to value this piece of their portfolios, how to disclose against it, and really making that a more holistic part of their investment process.
The policy settings are so important, and we've heard that a number of times throughout these discussions at this conference. Alasdair, I'm interested in your take on that. How realistic is Australia's current plan to hit net zero? And it does seem to rely quite heavily on the farm sector to do the heavy lifting, but is there the actual practical support to make that happen?
Well, let's start with some numbers. And let's start with the IPCC report that just came out a little bit earlier on this week. That actually said that 9.6 billion tonnes of CO2 could be sequestered in agricultural soils per annum across the world. Now, that's about 20% of global emissions being sequestered into agricultural soils. That's a very, very, very significant amount of carbon. How realistic is this? I can't tell you, but I can tell you that from our personal experience, some of you might have heard of the deal that we did at Wilmot Cattle Company last year with Microsoft, where we got paid a carbon credit for sequestering in our soil. And you're going to hear from Stuart Austin a little bit later on this morning, so I don't want to go into that in too much detail, but that deal, when we measured our soil carbon, we could demonstrate that over a 3-year period, and this is over quite a small bit of land, this is only about 4,000 or 5,000 hectares, our sequestration rate varied from 0.8 tonnes of carbon a hectare per annum to 3.5 tonnes of carbon per hectare per annum. So quite a big variation. But let's take the lower end of that scale. 0.8 tonnes of carbon per hectare is 3 tonnes of CO2 equivalent per hectare. So if we were to take that sequestration rate and we were going to execute that across, let us say, 10% of Australia's grazing land, let us say 40 million hectares, that would give us 120 million tonnes of CO2 equivalent per annum, roughly 20% of Australia's annual emissions. So how big is the potential for the ag sector to offset global and Australian emissions? The evidence we seem to be looking at seems to suggest it's pretty significant. Now, this is very early days, and we've got to do a lot more measurement, and we've got to see a lot more practice change happening, but the early signs seem to be suggesting that there's a lot of potential here. So, your question, Jaelle, was what support needs to be put in place to ensure that we can do this. And I'd say a couple of things. The first thing I'd say is that actually, over the years, government policy in this area has been pretty enlightened. Farmers around the world would give their eye teeth for the carbon farming initiative. It's genuinely revolutionary. Now, some of the execution of it may be a little bit difficult, and particularly in the soil carbon area, there's not been a huge amount of projects yet because the methodology has been hard, but the government are working hard on trying to change that. So they should be applauded for that. But there's other things, the National Soil Strategy, the Future Drought Fund. There's a bunch of good policy that's coming out of government to build resilience and build climate resilience, particularly in our farms. So I applaud all that. What I'm less happy about is that, and don't take this the wrong way, but frankly, too many people in this city spend too much time in this city. And you need to get out and you need to spend a bit more time looking at what's going on farm, because there's a lot of innovation on farm. There's a lot of farmers out there that are doing some great work in this area, and policymakers, people in government need to get out and learn a little bit more about what the leading farmers are doing, and then put in place ways whereby other farmers can learn from that. As we know, farmers don't really like listening to policymakers and bureaucrats and even industry bodies. Sorry, Jason. Farmers like listening to other farmers. So when we've got farmers out there that are doing good, innovative things, we need to get more farmers, we need to give a way to get more farmers listening to them. The second thing that I'd like to see, and in fact, some of you might have been curious about this logo here, Farming for the Future. This is a project that the Macdoch Foundation is heavily involved with the support of NFF and industry bodies like MLA. Projects like this are going to be very, very important to equip farmers with better data to make better decisions around what they're doing with their carbon. And yes, Hugh, it's not just about carbon, it's got to be about natural capital more generally. So this is a big project that's just started literally this year. There's a bunch of people from, hands up the Farming for the Future team. There's a bunch of people from the Farming for the Future team. There's a booth at the left there. If anyone would like to learn a little bit more about the Farming for the Future projects, have a chat to them. Sue Ogilvie, the research director for Farming for the Future, is going to be talking a little bit later on this morning. So it's projects like this that are going to equip farmers with good information about how they can make better decisions on farm to build resilience, profitability, and a good ongoing business by investing in their natural capital. But I'm sure there's more. Those are just a couple of things that I'm involved with that are good.
And Rebecca, your organisation is actually backing the bipartisan net zero 2050 target that we now have in Australia. But you have said that our 2030 targets do need to go further. You've also said that we're at risk of capital flight as investors seek greater security. Can you talk us through that a little?
Sure. Look, I think capital flight comes from obviously the domestic investors, and really the evidence that we have is that Australian investors who invest in renewable energy projects, for example, are investing 200% to 300% more capital offshore because of lack of stable climate policy at a federal level. We now have the net zero by 2050 target, which is great. We obviously support that, but that's the minimum baseline now. That's the minimum expectation. We've obviously seen many countries around the world already set out 2030 targets, and they're now having the discussions at sort of the sectoral decarbonisation pathways that are required to get to 2030. So that's what we need to see now. We need to see that next level of detail, and I guess the frustration around sort of lack of more ambitious targets. Our current targets of 26 to 28% are obviously a long way from the sort of the on average 45 to 50% that we need to see by 2030. Even though it looks like we're on track to obviously to beat them, already. But I think some examples are international investors as well have cited increased sovereign risk in investing in Australia again because of the lack of climate policies. They're often European investors who've seen a lot more stable policy for a long time in Europe, and you can see how the industries have been able to develop with much greater speed, but also the much larger amounts of capital and the positive impacts that's having. And I think, an example of where, in New South Wales, where there is clear policy, the New South Wales, renewable energy zones and so on, clear sort of state-level government policy has then enabled, quite rapid move to projects and setting up these zones, and which have been oversubscribed by investors. And there's clear demand there for investors to get into more of these. So how do we replicate those at scale? Because that seems to be, attracting the right capital, but we just need obviously more of that. So I think that's the work we're going to be doing in our next sort of post-election and with the policy settings that we're working through, and really, it'd be interesting to see how quickly we move from that net zero 2050, how quickly that flows through sort of across industries, across sectors. We've seen, quite rapid moves in Asia, for example, with our major trading partners in Japan and Korea, when they've set the 2050 trajectory. Industry and investment, very quickly follows. So we look forward to sort of seeing more of that in the Australian context, and there's, a great deal of appetite from investors to help, invest in that transition.
Thank you. Well, talking about targets, Hugh, AACo has stopped short of setting those definitive targets just yet, but you are investing quite heavily in the upfront science to actually inform them. Do you see a scenario where you'll have to treat your targets for methane quite differently to other emission sources at all?
The simple answer to that is yes. We didn't set targets because we didn't believe the science was done to be able to do that authentically, to be honest. And I'm really happy we did that. I see some, there are some other companies that have caveats all over it. They've got a net zero by 2030 with caveats, which I don't think is the right way to think about it. So we have to pull apart methane from our fossil fuel emissions, because methane is actually part of our natural biogenic carbon life cycle, and we believe more needs to be done there around natural capital that Alice has been talking about, and landscape carbon more broadly. And so if I think about the role that our cattle play in our environment, we think it's positive. And if we can measure, say, draw down past soil carbon to landscape carbon, so how much carbon do we store across our 7.5 million hectares in grass, for instance, there's a very material opportunity if we can get that measure right. And when I started in the company, AACo had 600,000 head of cattle. We now have 400,000 odd head of cattle. We now leave about 25% more pasture behind at the end of every year, even with droughts. I would expect that we're probably very close to being carbon positive from a landscape perspective already. And so you've got to pull that apart. And so when I think about fossil fuel emissions, which aren't natural, we can control that differently. And that's a little bit about the stuff that Andrew was talking about today, and we'll adopt that technology as we need to. So I think there is, you've got to pull them apart. And so we'll have that science done in the next couple of years. We're spending a lot of money and time and effort to get that right. So for us, it's going well past soil carbon. I do agree with Alasdair. I think, there's a lot of people here. I was speaking to some people on my table yesterday that are involved in farming and soil carbon. And that science was really well established down in the southern parts of Australia, but it's actually not been done in the northern part of Australia, where we have the biggest opportunity if we can get landscape carbon correct. And then we have a whole new revenue stream that comes into agriculture in Australia more broadly. We can meet our environmental requirements, which will make Rebecca and her people really happy as well. And we end up doing both, and that's a very good opportunity. So we pulled it apart. We do want to have targets at the right time, for sure, because they hold us to account. We're happy to be publicly accountable. But I also want to be authentic and do it the right way, and do it the right way the first time, which is when there's a target there that I can set, we'll do it.
Brilliant. And you touched upon the practicalities on farm on how to actually reduce carbon emissions. And Jason, a question for you. What do you see as being the main barriers standing in the way of emissions reduction for most farmers?
Yeah, it's really interesting, and we've touched on a few things already. And if we just very quickly on that, that CN30 target that was set in 17, or was stated in 2017, that actually came out of a CSIRO report that said if we have the right policy settings and the right investments in technologies, then we have the capability of getting to carbon neutral in about a decade. So that's actually where that came from. But we have a lot of discussion around policy and actions, and I think the national policies are really interesting. And Alasdair mentioned the COP26 challenge. And it's interesting how we were treated as a country and how we're treated as an industry. Remember what I was saying before, the livestock sector in Australia has halved our emissions since 2005, yet we've got countries that get treated better and more favourably going to COP26 where they've committed to Kyoto and haven't met it, they've committed to Paris and haven't met it, and just because they commit to something else they're seen as the good guys. And yet we've got evidence in an industry here that's halved our emissions. So if we're talking about capital flow, and the capital flow is actually on results and actions, then shouldn't the capital flow be coming into the Australian livestock sector? So we've got this disconnect between policy, perception, actions and activity, and that's part of our challenge. So when we think about what are the main barriers, it's this adoption and solution connection. So how do we actually put these things into place? The comment made about farmers, listening to farmers is absolutely right. One of our main extension activities now, these producer demonstration sites. And the evidence we've got so far is 100% of the people involved in a producer demonstration site make material change to the practices that they've been part of, and half of the people that turn up and listen to that story make material change to their practices. So farmers listening to farmers is incredibly important. But it also works the other way. So when farmers come out and say, we don't think there's anything in this, we don't think there's a solution yet, we don't think there's a path to getting forward, it actually creates constraint and restriction in how we move forward. So this PR battle about the positive messaging of agriculture, the positive messaging of livestock, talking about the progress we've made, talking about the investments that are being made, talking about the ambitious targets. And there's a heap of work to be done, but it's one of the most ambitious things that's been set around a climate solution. But it's also being done in a way that's also driving productivity and profitability and setting us up for a long-term future. So that's the long way around. Short way is we've got to have better messaging around solutions and the accuracy and acceptance of the things that we need to put into place to improve our engagement as an industry with the environment. And so that's baselines, it's the solutions that we can put in place, it's the sort of things that Hugh's mentioned, but it's also getting the positive message out. So we can do this, we can make progress, we can improve our natural capital, and we can be more productive and more profitable at the same time. I just can't see how that's a bad story. We're more productive, we're more profitable, we're creating intergenerational sustainability, and we're leaving the environment in better shape. I just can't see how that's a problem for anybody. And if we can collectively be pushing forward with that message, then we've got to be much better off.
Now, Alasdair, I know you've touched on this a little earlier, but I really would like to hear a little bit more about your learnings from the brokering of the major emissions reduction deal with Microsoft.
Well, I was actually going to say that Jason sort of nailed it there, really. So I wasn't sure there was a huge amount that we really had to add. You're all going to hear a little bit later on from Stuart Austin, who was the guy that actually made this soil carbon credit deal work. So he'll talk to you a lot about what he did on farm, the kind of innovations that he's using, the kind of decisions that he's making and how he's making them. And those are all really, really important. I think the one thing that's very interesting about that deal, though, was that it wasn't part of the ERF carbon credit scheme, and there were there have been some questions raised about the methodology and all the rest of it. It's perfectly good methodology, it's been used all around the world, but there are some questions about that, and we're constantly amazed by the number of scientists that say, oh, that's not possible. And none of them actually come and see what we're doing. It's kind of amazing that people can kind of criticize what we're doing on farm without actually coming to look at it. So again, it goes back to what I was saying earlier on. There's a lot of innovation going on farms up and down the country, and people just need to get out and have a look and see what's going on, and scientists need to start studying some of this stuff because it's pretty cutting edge and it's pretty interesting, and we need to do more of it.
Thank you. Well, unfortunately, time is up for us. But I would just like to say that was a very insightful discussion. We've heard about why organisations are taking climate change so seriously, the policy challenges and what the industry is doing to overcome those hurdles and make the most of the opportunities as well. And we've also heard about what it takes to practically reduce emissions on farms. So I think sustaining the nation is going to take all of us working together and learning from each other. And so I thank you, panellists, for sharing your learnings with us today.
And a huge thank you to Jaelle from Syngenta for moderating that panel. That was a really fascinating discussion. Thank you all very much.